According to Business Insider, the median home price in the United States dropped from $410,000 to $402,500. It's down $7,500 year over year. It's a good thing. It's a start. It's a start for us. San Francisco fell 10.9%, and that is massive. Truthfully, it's not enough if you've seen how bad that city's gotten. Other cities where we see home prices crashing right now:
Miami, Austin, Kansas City, Missouri, Tampa, Jacksonville, Denver, Phoenix, Cincinnati, and Orlando. In other words, all the cities that saw the highest price gains are now seeing the biggest drop. Of course, outside of Kansas City and Cincinnati. Moral to the story?
What goes up always comes down, and you can eventually apply this to interest rates. Values coming down, rates coming down. For me, these two delightful changes can't come fast enough. Again, Buffalo and Indianapolis are the two hottest markets right now, because in those cases, with these prices, people want to own a home more than they care where they live. Don't get mad at me, I'm just saying.
According to the wildly reputable Sinhala Guide, the U.S. housing market is in a historic decline, with demand collapsing and costs at a 134-year high.
Collapsing? I mean, don't get ahead of yourself. The 134-year high, I can buy that, and that's why we have low demand. Hell, make bananas cost $10 each and watch bananas rot on the shelves in the store. Same with housing, so demand collapsing is going to bring costs down. A self-correcting problem here, guys.
According to Sinhala, quote, "We're witnessing the biggest collapse of homebuyer demand in U.S. history. Mortgage applications have dropped by 63% since their pandemic peak, surpassing the declines seen during the 2008 financial crisis. Compared to pre-pandemic levels, applications remain down by 52%. The current crisis is driven by a combination of soaring home prices and elevated mortgage rates."
And I say good. Keep it coming. It's going to help our industry. Listen, the good news is what you can do. Talk to your clients, your realtors, your friends, and let them know that they should invest in second homes, in investment properties right now, because the soft market is the perfect time to do it. Buy when people sell and sell when people buy.
Most importantly, buy in a market where prices are low and people are buying, like Buffalo and Indianapolis. Let's see what Indy has to say about this. Meet Orin Edwards.
So in terms of investors, we are seeing a large influx of people coming into the city, just hoping to start their portfolio here or continue to build their portfolio here. One, because the price of homes are fairly low. Obviously, for people who are investing in, the cost of living is fairly low here in Indianapolis. And there's a lot of room for profit when it comes to the investment you make. In downtown Indianapolis, as we grow exponentially year after year, there are still a ton of properties that are in need of some love and some care. And with that being said, that allows for the return on investment to be very large. So we're seeing a lot of investors come in and continue to build their portfolio. Areas in the country where we are hearing from the most are California, the Carolinas, and really just that southeastern region of the United States. So we've got a couple of investors from Georgia, North Carolina, South Carolina, Florida even, but we are definitely hearing a lot from California investors as well. If someone was going to invest in Indianapolis, the starting entry point for homes in Indianapolis is around $75,000 for a good fixer-upper. And then I would say if you want to get on the higher end, you're looking at around maybe a 100 to 125. But after being fixed up and everything, we're looking at probably a sell point, ARV of 250 to 300 easily. We are not really finding the same value. If you get to the suburbs of Indianapolis, you're not finding too many homes that are, they need to break down to the studs and fix back up. So in reality, if it's not downtown Indianapolis, the starting price point is going to be probably 200 or above. If you go farther out, like to Kokomo or Muncie or Lafayette, then yes, we're going to talk about those price points being almost $50,000 to $100,000 for a fixer-upper, and you can sell it for maybe 200. But those cities are not nearly as big as Indianapolis and not as desirable. So the great part is a lot of these properties are all located very closely together in Indianapolis proper. If you're looking to buy multiple properties, then yeah, they're going to all be very close to each other and all have a very similar ARV. And if you would like any more information about properties in Indianapolis, please feel free to give me a call at 317-771-9020, or you can send me an email at oedwards@c21sheetz.com, and you spell Sheetz SCHEETZ.
That Orin's a nice young man. I'll tell you, call him, reach out, especially if you're in a high-cost area. Investment properties in Indianapolis, did you hear the numbers he was talking about? I hope this helps. Also, let me know what you thought about that Super Bowl halftime show. My kids loved it, me, not so much.
It's KDOT. Boom! I'm really like that, and your best work is a light pack. The Prince outlived Mike Jack, nigga. Boom!
Right now is the time to invest in real estate if you're in the right markets. Markets like Indianapolis and Buffalo would be great, especially for folks in high-cost areas. We'll talk about that today. My friends over at Oak Tree can help you out with your investment properties. Their pricing is incredible. Their service is impeccable. Fill out the information down below.